Iron ore surges as China restocks. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your morning stein of coffee, and I want to have a look at this article from Yahoo Finance discussing, well, iron ore. Iron ore futures in Singapore jumped nearly 10% as optimism over a bout of restocking by China's steel mills adds to tailwinds from the risk-on mood in global markets. And let's jump over to this screen here and have a look at the iron ore prices. We can see from Trading Economics it's at $99. Now, the Australian government, our budget is based on a US dollar price of $50 per ton of iron ore, so that's doing pretty good. And, well, I'll bring up this chart here. This is showing you West Australian government revenue from iron ore. Look at how much of it comes from iron ore. WA and all of Australia is pretty dependent on iron ore. Now, West Australia, it's the iron ore part of Australia. The East Coast, Queensland, New South Wales, a little bit Victoria, we're the coal part of the country. You know, that's the rivalry there that we got going. Anyway, you can see there, it's climbed up from $82, guys. Iron ore has climbed right back up. So let's have a look at this. Prices rebounded from Friday's pandemic-driven losses alongside a rally across commodities from nickel to crude oil on bets the impact of a new coronavirus variant may not be as severe as initially feared. As well as a broad recovery for risk assets, iron ore is benefiting from signs that pressure on China's steel production is easing. Iron ore demand fell to a 3-year low at the start of this month, MySteel wrote in a new research note. Now the expected resumption of steel output in December is affecting market sentiment and changing the market trend. Here's the thing, everyone. The market is just so hyped up on FOMO, on fear, really. That it's why it's moving so rapidly. It's all so crazy. You know, Omicron, people are, crazy, the market crashes. But if you look at it on the big picture, let's jump here. We'll bring this up. We'll look at the, US 500 index. And we'll go out to 5 years. So there you go. We're down 2 days in a row. But we've still got a long way to get before we hit to this point, guys. Okay, so there may be some opportunities coming if you're that worried. But what happened afterwards? Here's the thing. If you're investing, what's your time frame? Are you a trader? Okay, so it's a different mental mindset if you're a trader just trying to make money in the oscillations and swing of the market and provide liquidity to the market in that process. That's a valuable role. It's not something everyone could do. It's not something I have the emotions for. I'm investing in a few long shots, but majority in stable profit-making companies that will ride out difficult times. So if your time horizon is 5 years, 10 years, 20 years, it's a bit different to a week or 2 days. You just watch it and dollar cost average in if it goes down and you're confident in the company. The Shanghai-based research group said pig iron output would rise by 37,000 tons a day by the end of December as 16 idled and 2 overhauled blast furnaces were restarted. That's a relatively small amount, but could mark an inflection point after months of pressure on steel output. Iron ore has had a wild year after a first-half demand boom was quashed by China's squeeze on real estate finances that drove a fall in construction activity, as well as a government push to curb pollution and emissions. Steel output slid to the lowest since 2017 in October, and Singapore futures plumbed an 18-month low earlier in November. Prices on the Singapore exchange climbed as much as 9.6% to 105.50 a ton before trading at 102 by 3:30 p.m. Iron ore in Dalian rose 6.8%. So let's have a look at my favorite iron ore company that I've invested in here in Australia, Fortescue Metals Group. And when I just captured this data a few minutes ago, this trading at $16.96. Now, I will make reference to another video I did about where the media was talking about iron ore mines closing down because some of them were no longer profitable at the reduced rate. But I still dollar cost averaged in, just kept buying more over this period, just building up my little stack like the top ownership in the SelfWealth community is, when the bottom aren't. I guess they're selling out. Why are they selling? Other or taking profits? and the majority are buying because it's a good dividend-paying stock. We can see here we're sitting at the lower end of its year range. Predictions are ranging from $28.40 high down to $11.08 low. What's interesting to see if the push to look at getting green iron ore, hydrogen-produced iron ore out of the ground, that might give Fortescue an advantage in the future, but we'll see. We'll see. What do you reckon, everyone? What market have you invested in? Are you in any iron ore shares? What would you recommend, or what's your hot tip to the rest of the viewers? Check out this last video I did about iron ore mines closing, and, well, just think about your long-term strategy and how that impacts it. Are you a day trader or are you an investor? Anyway, thanks for watching. Take care, guys, and I'll see you all next time. Bye for now.